Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry. Today is Wednesday, January 13. The time is around 4 a.m. GMT. Sorry for the for some reasons the previous video that I posted was only 5 seconds long. Not sure why. I thought that I recorded everything completely, so redoing it again. So here today we're gonna be looking at the chart of silver, right? Now I think for some this video here or this chart may not be to your liking because honestly at this point silver and gold still continues to consolidate without any very clear structure right now, right? So there's too many possibilities at the moment that really is the best thing to do is not to speculate on the short term, right? And that's just my advice, not to speculate on the short-term move because a lot of things can be happening and things can change in the shorter cycle. Now this is the 1 hour chart here. On Monday we got this pretty strong sell-off, right, in the gold and silver space, and the sell-off looks like and feels like an impulse, and that's exactly what we are labeling here. 1 2 3 4 5. So you can see here this rally to 28 ended with 1, and this is a zigzag ABC. So knowing that this is with 1, that by itself already tells you that larger degree we are still bullish, right? So this is only a correction A, B, and possibly as long as we stay below here we can go lower. Now like I mentioned, if you rely too much on the shorter cycle, I think you can get misled by all this noise. Now let me show you in the daily chart, and remember this label here 1 and A, and now let's take a look here on the daily. Okay, and that will be the position of the 1 and A here. Okay, this is the 1, this is the A. So we're talking about this September 25th. As you recall, last year we got a very strong rally to $30, topping out in August, and then we got equally quick sort of sell-off to 22, ended in September 25th. Now since then we've been consolidating the gain and really continue to be trapped within this two big range here, right? Now to be honest, from the trading point of view, right? Now I can label it however it is, but the fact of the matter is until we break above this $30 again, right? We still cannot rule out a double zigzag or a double correction like this, right? We still cannot rule that out until we break above $30, right? Not saying it's going to happen, but we cannot rule that out. Now one thing we can say for sure with silver right here is that the right side is higher, right? That's one thing we can say for sure. The right side is higher and it is bullish. And why? Because you can see here this pullback last year was clearly in 3 waves. Now if this were bearish, this would have been an impulse, no question, something like this, 1 2 3 4 5, but it's not. It is only 3 waves. That tells you the right side, regardless what the short-term noise is happening, up and down, whatever it is doing, the right side is higher because it's only 3 waves. Now that doesn't mean we cannot do double correction and do, go to $19. It's possible, but because the first leg is only 3 waves, even that is going to happen, it is still bullish. I know that some people may not like to hear that, but it is true. The right side is bullish. It doesn't matter what, we got this big sell-off on Monday, or even if we do double like this, still bullish. Now knowing that, you need to be careful in trying to extrapolate whatever you saw on Monday to be, we have to have a follow-up because it is bullish. So you need to be ready for anything. If the market suddenly changes, you got to be ready to prepare what sort of count. Let's say if you are Elliott Waver, then you need to be ready Okay, so what kind of count should I prepare? Let's say if we don't go another leg lower and instead we go higher, let's say from here, right? Now, if you take a look at the 1 hour chart, for example, now this one again has the feel and look. Now, but feel and look sometimes can be quite deceiving, all right? Because, for example, I can do it this way, and I do not think I violate anything. I can do A here, and this could be some sort of triangle, a B, and this could be a C, and this could be my W, right? It's a double zigzag, so then this could be my X, and this could be another ABC here, A, B, with a truncated C, and then that will be the end of my Y. And if you measure the extension, now you can see W equal to the Y over here. So in fact, it did reach the 100% and starts to rally after it reached the 100%. So it's a WXY. I could, if I want to, honestly, I could label it like this, and I am not violating Elliott Wave, because that is also a possibility. So I think the main key takeaway then is all this short-term noise, the short-term movement is noise. It can change in many different permutations, right? But as long as we get trapped between this range, it's gonna be noise. If we start breaking above here, you know the next leg higher has started, and then we continue to look for more and more and more upside. If we break below September 25th, you know the correction is going to extend, and it can potentially reach the next 100%, which is around $19, 19.19 to 20, and we expect buyers to appear strong support from there, and then it can go to new high from there, or at least do a big 3 bounce at least. Okay, that's kind of the main key takeaway in silver. And in gold will be all exactly the same as I explained. The structure is similar and the logic is similar, right? So that's basically the idea in the precious metals. So shorter cycle, unfortunately, if you rely too much on this, I can say this one, it could change in many different ways and forms, right? And the main key takeaway is we continue to consolidate now between the high and the low from last year, and we should be keep monitoring how it goes. All right. Also, now even though we know that this is clearly 3 waves, but also at the same time, silver also poses a challenge here, because you can see the reaction is not the best. The reaction since we bottom at 21.7 is also kind of overlapping in 3 swing, so that is not really very assuring, right? Because if it is ready to go higher, typically you want to see a strong clear impulse reaction, but it's not. It's also kind of consolidating sideways, so perhaps we could continue to consolidate. We can even do like a triangle as well, like this, and it's gonna continue to consolidate, right? And so people who keep trading and anticipating perfection in the shorter cycle, you might get disappointed because it's not in the trending stage. Now the trend is bullish in the largest degree, but in the medium term shorter cycle, we still get stuck within the range right now. Okay, so hope that's clear, guys, and sorry about the previous video. I'll see you all again. As always, if you want to check our service, we have 14 days free trial. The link is provided in the description of the video. So see you all again tomorrow. Have a nice day, everyone.